Hi, everyone. I'm Kia Haslett, Banking and FinTech Editor at Bank Director, an information resource for bank boards. Thank you so much for joining us for the 5th webinar in Cross River's Faster Payments webinar series. Today, we're going to dive into the disruption that faster payments is creating for the real estate industry, with insights from experts at the Clearinghouse, Payments.io, and Cross River Bank. We're going to answer a few key questions about historical transaction models within real estate and the innovations pushing the industry forward. With that, let me introduce our panelists. Cheryl Gruz, Vice President of Product Development for the RTP Network. Jason Doshi, CEO and founder of Payments.io, and Bhavik Khatri, Cross River's Business Development and Strategy Lead for Commercial Real Estate. Let's start off today's webinar with a poll question. Are you currently working within the real estate ecosystem? Yes, no, or planning on it? It looks like we've got a minority split. 37% say yes, 41 say no, but 22 are planning on it. With that, I'd like our panel to share who you are and the work you do, especially within the payments and real estate space. Cheryl? Cheryl, I think you're on mute.
Not a good way to start. So good afternoon, everyone, or good morning. My name is Cheryl Gers, and I am the RTP product manager at the Clearinghouse. At the Clearinghouse, we run the payment systems in the United States, a private operator. So you may be familiar with ACH and chips and checks. And we actually introduced the real-time payment network in November 2017. And I've been working with banks and with real estate members of the ecosystem and other businesses in the U.S. trying to promote and educate on what real-time payments are. Nice to be here today.
Jason?
Yep. Hey, everyone. Good afternoon. Good morning. Thank you, Kia, for moderating this, and thank you, Cross River, for putting this together. Really excited to be here. My name is Jason Doshi. I am the CEO and co-founder of Payments.io. I've spent my entire career in the real estate ecosystem, specifically on the mortgage side. Our other co-founder has spent some time in the title industry, and we came together to launch Payments.io. We are a vertically focused real estate payment processor. We help facilitate the movement of funds within a real estate transaction. We need partners like Cross River to help facilitate the movement of funds, and companies and organizations like the Clearinghouse to help devise and maintain payment rails. So happy to be here and excited to share our thoughts, learnings, and the future of RTP.
And Bhavik.
Hi, everyone. Kia, thanks again for moderating, and thanks to the panelists for joining us. I'm Bhavik Khatri. I lead business development for a commercial real estate business focused on strategy, capital markets, new product innovations. My background stems across financial services. Started my career at Citigroup in the capital markets group. Spent 8 years in private credit, 2 years in private equity, largely focused on alternative assets. I think what's exciting about this webinar is there's a lot of new technological innovations coming to alternative assets, including real estate and other ecosystems. And, Cross River plays a critical role in providing key core tech infrastructure to companies like Payments.io and facilitating products that the Clearinghouse is building, like the RTP network. So we're really excited to have this discussion and share how we play a role.
Great. Well, I think we actually started touching on my next question, which is how do all three of you work together? Jason, did you want to start this off?
Yeah, for sure. You're right, Kia. Started alluding to it to a little bit. And what's nice about the real estate transaction and what's nice about moving money as a payment processor is that you have to work with other organizations, right? In a real estate transaction, there's multiple stakeholders. There's real estate agents, there's mortgage companies, there's obviously the buyers and sellers, there's title companies, there's attorneys. And similar to a real estate transaction, when you're moving funds, you have to work with other service providers. So, we're excited to partner with Cross River. That helps us facilitate the actual movement of funds from to and from stakeholders and counterparties. And we're excited to partner with the clearinghouse through the RTP network because we do need access to these payment rails that help shuttle or facilitate the movement of funds, right? So anytime money is moved, you need a bank, and you need a mechanism to do that. And the clearinghouse provides that mechanism through ACH, which is one, and RTP, which is more of the conversation today.
Someone else want to chime in about how the role that your firm plays in the payment space for real estate?
So as I mentioned earlier, the clearinghouse, we run payment networks in the country, and we connect banks to this network. So we brought aboard the RTP network, which is a brand new method for companies and consumers to make payments. They're settled instantly. And we have worked very closely with Cross River and other banks in connecting them to the rail so that they're able to provide new services and products to their customers. So especially in the real estate segment industry, there's such a need for payments all over. There's many different stakeholders, and there's many payments that have to be made to the numerous members of the ecosystem, the title companies and the escrow companies and the consumers, the lawyers, the tax people. You have so many payments being made, and there's a timeliness that's important in some of the transactions, not all. Some of them could be a little slower, but what real-time payments now brings, and what we're excited about working with Cross River, is it brings a 30-second beginning to end and settlement and confirmation of a payment. So it's a advancement using new technology. For those out there, technology geeks, it's all based on ISO 20022. There's payment and messaging going back and forth, and it's 24/7. And we're providing that so the connection of all banks gives the connections for all consumers and businesses around the U.S. To be using a new way to settle real estate transactions.
Yeah, Cheryl, I think that's an interesting point that you brought up that sometimes gets overlooked, is that there are a ton of payments being made in the real estate transaction. When you correlate that to other industries, I feel like real estate really has probably the most touch points of funds being moved. But it's important to note that not every single payment is urgent, right? Like not every single payment has to be instant. And when you look at the different payment rails available, one of the things that we've done and how we've positioned ourselves really is the financial operating system for a real estate organization, right? Whether that's a title company, a real estate brokerage, an attorney, a lender. And we allow our clients, right, who are escrow holders and live in the real estate ecosystem, we provide them with optionality. We provide them with, which payment method to use at that moment in time. And I think that's an important thing to note, because if it's an earnest money deposit, for example, if it takes a day and a half, I think, that's okay. But if it's cash to close and everyone's waiting at the closing table and it's like, where's my money? I need to close. That's, that would be an application for something like RTP. And I think that's the benefit of the clearinghouse, is having access to the different payment networks and payment rails. So I think that's a nice distinction that you had pointed out, Cheryl.
Yeah, thanks for grabbing that. It's all about choice now, right? It's choice. It's not, this is an add-on. This didn't take anything away. Our government didn't make it mandatory. It's purposeful for you and your customers to know where to place and use it.
Mhm.
Well, I wanted to throw it to Bhavik. None of this happens without a bank, right?
Exactly, and I think it's a great transition because I think Cross River plays a really important role in the entire payment process, right? I think for starters, we enable banking technology through our proprietary infrastructure and banking core that Cross River developed in-house. We provide the foundation for our partners like Payments.io and utilize the technology from the clearinghouse to really connect different payment rails to originate these transactions efficiently and settle these funds, in this case, near instantaneously, right? And our goal really is to facilitate technologies, offer optionality so that Jason can create an operating system based off our operating system and help with the adoption of these underutilized payment rails across industries, right? Our goal is to provide the tools in the toolkit and allow our partners to use those tools to build great businesses and companies. As a participating bank on the clearinghouse network, we really want to help grow adoption and increase adoption in underserved markets like real estate. I think enabling the modernization of these archaic, kind of old alternative assets that have taken a long time to bring in new technologies for various reasons we'll discuss later on. We're really excited, and I think what's a key pillar to kind of what we do at Cross River is really bringing financial inclusion to small businesses. Real estate is often highly fragmented, many mom and pop real estate owners, and we're looking to serve that market, right? The same way we did with the PPP loans. We really served our communities, and we try to bring these technologies in a way that offers a very regulatory compliant service where we can focus on the regulation and what we know best and let our partners focus on what they know best, which is their clients. And so this is really exciting for all of us to work together.
Bhavik, you're 100% right in the sense that it is kind of like a coming together of all the stakeholders of the industry, with mom and pop companies specifically, right? Small, medium-sized businesses, whether they're real estate brokerages, title companies, even attorneys, they know that there has to be a better way, right? They hear about RTP, they hear about faster payment rails, but they don't know where to begin, right? They don't have the resources, the engineering resources, the time, or it's really not their business, right? That's not their core business to build out a payment processor. But they know that, all right, Cross River offers faster payment rails. These faster payment rails are maintained by the clearinghouse. How do I put all this together, right? And I think that's again, kind of like the value that we provide in that. And that's how we've all come together and we work together, is providing organizations that are able to focus on what they do best, right? A title company, a real estate brokerage, focus on what you're doing, but us coming together allows them to gain access to these financial products. You mentioned financial inclusion. I think that's a huge thing, is that everyone knows they want to get away from paper checks, right? How do we get rid of paper checks? How do we get rid of these really expensive wires and cumbersome wiring approving processes? How do we change this? But they just don't know where to begin, right? You can look online, you can Google things, and there's a wealth of information, but how do you really decipher the noise from the signals and what's of value? And you're moving money. That's the other thing, is that that's one of the biggest parts of the transaction, especially for our clients who are title companies. They have two main functions. One is insuring title, right? They're a title insurance company, so they have to insure title. And then the second is actually facilitating the movement of funds into their escrow account, which is money coming in from a buyer, coming in from a lender, and then dispersing out to all their third parties. And from their perspective, they're like, how do we make this better? How do we make it safer? How do we make it faster? And again, that's where we, all of us are playing a role in helping them do that.
And I think one last thing that I'll kind of add here is just from kind of the market perspective, I think, the title company, as you alluded to, Jason, some of these payments don't need to happen right away, right? It's not going to change anything. But I think in this world of on-demand, instantaneous everything, the consumer themselves want it, right? They don't want the delay. And I think that in turn is what creates companies like Payments.io and RTP Network to exist, is there's demand for the product, right?
Right. Yeah. That's the
Yeah,
biggest
we're all
thing.
three of us are working together really to bring a value proposition to the end customer, to the consumer, and to the companies that support the consumer. So we're all about providing value and reacting to market needs, nothing else. We're facilitators for our customers out in the marketplace.
Well, Cheryl, my question for you is, what did the payment space look like before RTP was rolled out 5 years ago? And today, how many banks that are connected to the RTP rails are capable of sending RTP?
We have in the United States a group of legacy payment rails. I'm calling them payment rails because what we at the Clearinghouse and at the Fed do is we're the plumbing. We provide the plumbing and the connectivity between 9,000 banks in the country. And before RTP, we were pretty stable. The last payment system in the United States was ACH, and that came out in the early 70s. So it's been quite a while. And before that, wire system and checks. Checks has been here since what, the 1700s. But we still have billions in the industry. So we have a real nice check processing line of business also. So everyone we're at the Clearinghouse, we're the private operator. So there's also the public operator, who is the Federal Reserve Bank. And basically in wires and in checks and in ACH, it's 50-50 split. We kind of, they're our regulator, but they're also our collaborator, competitor. I don't know if you want to call us competitors. Our pricing is basically the same. But you need two operators, right? Everyone's saying, oh, the Fed now came in, you guys must be running, or you're scared and you're competitive. But there's 9,000 banks connecting. We have 358 connected today. To get 9,000 banks connected, you need more than one operator. And so we're happy they're there. They just validated that every bank in the country wants to be part of the instant payments. So why RTP, and why did we develop it and put the investment in 2017? It was invested by the top banks in the country. And the reason was to, what was just previously said, is on demand, and e-commerce is becoming a table stakes. It's no longer nice to have. People are expecting these same quick, fast interactions that they're having on email or text messaging. They're expecting it in the banking and the moving of their funds. So, I think it was 10 years ago we started building it. It was built from scratch. It's not bolted on to another payment system. It was built purposely, put, everything in for what a new payment system should be. We went live in 2017. We processed our 500 millionth payment in mid-July. We continue to increase our people that are connected. And we also have about 40 banks that are sending. So Cross River being, one of the top partners in the sending realm. And some banks have really embraced it, like Cross River has, as a new product, and they see the value and are working with their customers to bring on. So we're just excited that more banks are going to be coming on, because it is only connected to banks, and looking for those that are out in the US that their banks don't have it, to remind them to get it. My little pitch for everybody in the United States having a say. And if your bank is not connected, go tell them to get connected, because they're missing out on giving you services that you really need today in an on-demand digital environment.
Well, before we move on to our next question, I actually had a poll for the audience. So what is the biggest, lost my poll. What is the biggest pain point within real estate transactions? Is it a fragmented payment experience, multiple disbursements, slow fund settlements for the transfers that need to be faster, or all of the above? Do you guys have any thoughts about these pain points? Jason, I know that apparently not all the funds need to go fast, but the ones that do, it sounds like it's very stressful when they don't show up.
Yeah, I mean, for me, being an operator in the space, being on the ground, running businesses, mortgage companies, title companies, real estate brokerages. I would say all the above. I would say that the real estate transaction could use a lot of improvement. And the fragmentation, I mean, these are all just trigger words, right? They're buzzwords, right? When you hear fragmented, you hear multiple, you hear slow, it just screams real estate industry. Which is why what Cheryl said, they spent about a decade building the RTP network. It's one of those things that it's the RTP faster payment rail with all the benefits that it has, it's almost that it was designed for the real estate transaction, right? Because it covers the fragmentation, it covers the slowness and the inconvenience of today's payments.
Well, it looks like our audience said that all of the above are payment or pain points. We didn't have anyone say multiple disbursements, which is interesting. So can we get a little bit of a sense of how the flow of funds works in real estate transactions and what kind of transactions there are, the participants? Jason, do you want to start us off with this?
Yeah, Cheryl mentioned it earlier, saying there's a lot of payments that are made within a real estate transaction. And not only there are a lot of payments that are made, they span over a very long time, right? That's the other interesting part, is that the earliest touch point within a real estate transaction is the earnest money deposit or good faith deposit that a buyer would send into an escrow holder, right? So that could be their real estate broker, it could be a title company, it could be a closing attorney that's holding on to these funds. A lot of these things are state specific. Almost every transaction has an earnest money deposit. In certain states, you have due diligence fees that are due. You have seller fees that are due right upon signing a contract or making an offer on a contract to purchase a home. But that's the earliest touch point. And at that point, this is very new for the home buyer. If they're a first-time home buyer, this is obviously the first time they're doing this, so they're relying on their real estate agent to guide them on what to do. And it's the real estate agent today tells them, go to the bank, get a certified check, or go to the bank and send a wire. Here are the wiring instructions. Here's where you mail the check. It's a very, just right there on day one, it becomes a very fragmented and inconvenient experience. Because you have one party telling another party to do something that they're now kind of left in the dark about, right? It's okay, go to the bank and send a wire to this other company. Let me know when you do it, so then I can then call that other company and ask them if they got the money. Just talking through it just sounds ridiculous. And it's a very uncomfortable experience. It's a very awkward experience, especially from the consumer's perspective, because this is a lot of money, right? Most people have saved up to buy a home. This is their life savings that they're starting to now use, and telling someone to go do something and being in the dark is a very uncomfortable thing. So that's the earliest touch point of when a consumer is sending money into escrow. The next big touch point is really right at closing. So at closing is when the buyer sends in the remainder of their funds, the remainder of their down payment. That's generally called their cash to close. And this is the larger of the two payments that the buyer makes. The earnest money deposit, depending on the market, can be $5,000 all the way up to maybe $100,000 if it's a very competitive market. Their cash to close is their second touch point of moving funds into escrow, and it's generally the remainder of the balance, right? So if they're purchasing a $500,000 home, they may have already put down, let's say, $10,000. So now that remaining, $90,000, if they're putting down 20%, is due. That again is send a wire, get a certified check, and it's very time sensitive. This is where the urgency starts to play a role. On earnest money deposit, not so much, but cash to close, it's very urgent. Oftentimes the buyer is getting their final numbers of how much money to bring the day before closing, the morning of closing, and now they're scrambling. So this is where the urgency, a lot of money is being moved. This is where the fraud actually occurs, because buyers are scrambling to bring in their funds. They get an email or a phone call from who they think is their attorney, their title company, their real estate brokerage, telling them to do something different last minute, saying, oh, I know I told you to send the money here, now send it here because we changed something. As a buyer, you're not thinking, you're like, I need to get my money, I need to close on this house. And that's where the hackers and the fraudsters divert funds to their own account, and that money is gone and stolen. So it's a very scary experience when things like this happen, and it happens on a daily basis. 1 in 3 real estate transactions actually have an attempted fraud, attempted hack to try to steal buyer funds. So at closing is when you're then moving the larger sum of money. And then the third touch point is lender proceeds. So lenders then, if the buyer is getting a mortgage, which the majority of buyers in the US are doing, the lender has to send these funds into the title company. So at this point, the day of closing, the title company, the escrow holder, now has money from the buyer, from their earnest money deposit, money from cash to close, and the lender proceeds coming in from the lender. So now these pooled funds are then dispersed. So this is where the real estate transaction gets very interesting, because the title company and the settlement agent now has to disperse out to all these stakeholders. The stakeholders in this transaction are now, it's the seller, right? The person selling the house, or the organization selling the house, needs to get their net proceeds. So if they were selling a $500,000 house, assuming they have, let's say, a $200,000 mortgage remaining on that property, they're due $300,000. The title company would send $300,000 to the seller. There's a real estate agent involved, they're due a commission. If there's a mortgage broker involved, they're due a commission. And then obviously there's municipality payments, there's prorated taxes, water bills, there's insurance premiums that are being paid out to the carriers. So State Farm, Allstate are due insurance for the new property. And then the biggest thing is the lien payoff. So the seller has an existing lien to pay off, and that's all part of clearing title, is that the title company needs to pay off that existing mortgage. So let's say that's with Rocket Mortgage or Chase. They have to pay that off, and they're wiring those funds. And that's another big point of fraud, where you get a payoff. You as the title company are sitting in your office, you're the funder on this transaction, you get a payoff, you think it's from Rocket Mortgage, but it's been spoofed, it's hacked, it looks like Rocket Mortgage, but something's off, namely the account number is wrong. So that money's going to a hacker, and that money's gone and stolen. So this is the entire transaction where money is moved. And not only is it a lot, it's fragmented. There's a lot of different people involved, and there's a lot of different payment rails involved. So I mentioned checks and wires. The same thing happens at settlement. Is the seller may want to check, the lien holder that's being paid off may want to wire, the municipality that you're paying taxes to may want to check. So there's different people. Sometimes the real estate agents go into the office at the day of closing to meet their clients, and at that time they pick up their payment. So that could be another check, right? So it's again a very fragmented and disjointed experience. And what we again need to come together is we can help build this marketplace. We can help streamline this experience, make it safer, make it faster, make it more convenient. And that that's really what we're excited about, is the future of what this is really streamlining the experience and not having it so dependent on someone sending individual account numbers, routing numbers, having to send and receive checks in the mail. So having a technology partner to do this is really what we're most excited about.
Yeah, it's interesting because this doesn't sound like a very secure process, and it sounds like a lot of money is moving at a lot of different times, and lots of checking and like, hey, did you receive that? It did go to you, right?
Right. Exactly. And by the time you're checking on some of this information, it could be too late, right? Because you're just assuming that everyone is kind of doing what they're supposed to be doing, but the fact that it's a fragmented experience, it's very easy for things to fall through and cause people to lose a lot of money.
Carol, Blavik, did you guys have anything to add to this convoluted flow of funds that Jason just described?
Yeah, I think, look, Jason, thanks for that. I mean, I think you really explained the entire process well. And just echoing the fragmented experience within real estate, I think it impacts all parties, right? We as a bank want to ensure that the chain of stakeholders have the tools they need, and we want them integrating with the technology that we can provide. I think using Cheryl's metaphor of she's the pipes and plumbing, we're really the nuts and bolts, and we put it together in a nice toolbox for our partners to utilize. I think by understanding what our customers need as well as their customers, we can create new products and features that span across all of these different products, right? And our simple goal is to provide a technology that offers a centralized and simplified process to manage all of these complex transactions. And as kind of a simple example, one of the important features on the payment side has been our ability to provide flexible account structures and transaction management through our subledger capabilities. I think most of our payments clients use this feature to really create multiple subledgers under one master account, which allows them to move funds near instantaneously as they're dealing with the kind of fragmented flows, right? And I think by using these subledgers, partners can rely on automated balances. They're able to check their balances. They're able to provide a more efficient and better user experience for their clients if we can offer that solution to folks. And I think one thing you did mention was there's fraud, there's a lot of compliance. I think by providing our clients with this comprehensive solution with compliance first in mind, it really helps our partners, again, do what they do best, right? So yeah.
Yeah, Bhavik, that's I'm glad you brought up the subledger piece of it, because that's really what drew us to Cross River and eventually sealing our partnership was the fact that Cross River utilizes subledgers and has the technology to allow us to bring those out to our clients, because in a real estate transaction, especially when you're dealing with escrow accounts, the movement of funds, who holds on to these funds, where these funds are sitting at any given point is extremely important. There's a lot of compliance around it. And Cross River's ability to provide subledgers was huge for us, and it's huge for the industry, especially from a compliance perspective.
And I think, Jason, you mentioned so many moving parts, and some of it from a cash management side, right, is disbursements. Some of it's receivables, and each side of that is has its own unique attributes and capabilities and what you need from a network. And on the RTP system, we are a credit push, which also means that no one can ever debit one of those accounts that you're storing or that your customers are giving you. So there's a sense of security by having a credit push only system. And then to provide a method to receive if they can't push to you, we've come out with a new product, request for payment, which we can talk about later. But there are tools that are available to the banks and to their ultimate customers to help. I think one other thing I just wanted to add in that complex is time zones. And one thing that real-time payments has really brought to, I think, the real estate agent is the ability to support West, East Coast, West Coast, urgent settlement times. We're open 24/7. The network's continuously. It's not banker's hours, and it's not waiting for a 6 o'clock closed wire. You can go ahead at 8, 9, 10, 11 o'clock. And having that 24-hour cycle, I don't mean for real estate professionals to have to work 24 hours, but it's really nice to get your money into your accounts when you're not sitting in front of your desk.
Right. Yeah. No, that's huge. You're right. And especially with, where volumes are today, I think getting paid faster, especially for real estate agents, that's huge, right? Because if a closing happens late Friday, if it happens, 3, 4, 5 o'clock on a Friday afternoon, which is not uncommon, those funds aren't, they may be dispersed and they may be in transit, but they're not hitting till Monday morning, Monday midday. And that's, that a few days, especially in today's world, does matter, right? People have this, we talked about this earlier, this expectation of things being on demand and everything happening so quickly. People still question why moving money takes so long.
Yeah, I just had a in Florida last week, and it was 3 p.m. and it was people flying in, and the money didn't come to, the wire didn't come in, and I'm a banker. I kept looking for the wire, and real estate agents, like, these people have a whole bunch of people, you just got to give them the keys. And I'm like, I'm not giving anybody any keys until, I get my settlement number, It's hard to evict someone. And so found out, like what the wire for the bank had a different RTN that they needed for a wire payment. And those are the kind of disjointed processes. It's just whatever's your RTN and your account number for real-time payments is what it's going to go to. There's no separate numbers that you have to know that for this bank, they only want disbursement wires to this RTN. So there's a lot of, because I could tell you I was stressed, and I can imagine other people having the same problem. And I kept going, if they only would they send RTP, I could be, at the bar celebrating right now, but I had to, wait until it was exactly 5:55 when the wire finally showed up in our bank account in Eastern time. So it was just like, wow, who wants to go through that stress? And your product is something that can take that kind of stress away in a home buyer's experience.
Yeah.
Is there any pushback to the adoption of real-time payments within the real estate transaction? Or put another way, does the degree of friction give anyone in these parties insurance and a type of a hedge that the money is moving to the right place? Because this is such a check-dependent industry.
Mm-hmm.
The big thing is our confirmation. This real-time payment network is the only network rail in the United States that actually confirms within 30 seconds that the money's sitting in the account. So everyone thinks the wire goes into someone's account. There's no confirmation that the wire's sitting there. When the title company sends out a payment using RTP, they know in 15 seconds that account number was valid and that bank has the money sitting in Cheryl's account right then. And it's kind of like a FedEx or a post office confirmation you get. It's the only payment rail that has that. And I have talked to numerous, as Jason has a lot more experience, but real estate professional, and that is completely one of the major drivers when they learn. And a lot of this is about education, which this webinar hopefully is accomplishing. When they learn about the controls and the capabilities, such as confirmations 24/7, they begin to understand that I think the fear of the unknown that keeps people away from it. They just don't know. They've heard so much about payments and different kinds of payments. They're confused. And we as bankers have completely confused the environment. You shouldn't even have to know what network it's being settled on.
Yeah. No, that's funny, Cheryl, because so many people outside the banking and the payments industry confuse them all the time, right? Wire and ACH and RTP and push to card. Like, people don't necessarily know how the money is moved, what rail it's on. They just know they got it. And for the real estate transaction specifically, people are so used to using Venmo, right? So they're expecting a Venmo-like experience. We've talked to so many title companies and real estate brokerages where their buyers are saying, "Oh, can I just Venmo you my earnest money deposit?" Right? And it's like, well, that's kind of similar to what we've built, because that is the experience that buyers are looking for. It's that instant payment. It's that instant confirmation. And going back to having that confirmation number, I mean, that's huge, because when you send a wire, you kind of are like crossing your fingers that it's going to the right place. And then when a wire takes too long, by too long, I mean maybe like 2 hours, and someone's like, "Oh my God, I don't have it yet. What's going on? Do you have a Fed ref number?" Everyone always asks about this Fed reference number. Little do they know that you can have that number. By the time you research what's really going on, that money's either going to hit your account or it's not going to hit your account. So it's not something that, like you mentioned, you can actually put into a system, get a tracking number, see exactly what's going on in real time.
UPS.
Right, exactly. Yep.
It's there. It's not basically a signature by the bank that they put it in that person's account. And the only thing I'll mention is, like with Venmo, and what's the difference, why RTP? In many of those, it's the difference between messaging. So Venmo, PayPal, Zelle, it's the messaging, but the settlement isn't real, which means you can still have a return. You could still something coming back. With RTP, instant payments, that's the unique difference between RTP and FedNow. It's immediate, it's confirmed. The money is moved between the banks and you won't have a day 2 return or a dispute. So no one's taking that money away from you when you receive that money. Of course, there's provisions for errors if there's duplicates or whatever, but it's not about, oh, I changed my mind. I've decided to unwind the transaction. You can't unwind the transaction when you're using real-time payments.
What is the adoption rate for faster or instant payments within the real estate space? Do we have any stats for our audience?
When you use the real-time payment network, we don't have it, there's no purpose code. So we can't tell if the transaction's going through and there's a little code there that said it was a real estate transaction. We anecdotally monitor our traffic at an enterprise level, at a network level, and we do see the names on the sending account. So I could tell you there's probably about 1 million or more transactions a month going through right now. Most of it is what we see is like Payments.io. You're going to go to your aggregator, which is the best way to do it in many situations. So they become your educator. But we do have, it appears to me, a lot of emergency payments, or some smaller title companies or lawyers have now identified on their online banking portal that they have an option on their online to do instant payment, not just wire and ACH, and they're beginning to use them. So we're seeing more and more adoption, especially as we've been educating and working together with bank partners and platform providers, such as Payments.io, to get out there and say, start using it. It's available to you, but people don't know how to start. And once they start, they're okay, but trying to find out how they can start is their, it seems to be their challenge right now. But there's traffic on the network, and every month it grows.
Yeah, it's I think, we talked about this earlier, it's just educating the overall market, educating the stakeholders on what's available and how to utilize the appropriate payment rail at the best time.
I think, from our end, I can say that real estate is a market we're very keen on exploring further, right? I think it's traditionally been a laggard in some of the innovation and technological advances. But we're starting to work with clients in real estate and are seeing massive shifts in business operations with faster fund movement. I think companies like Payments.io are there to show folks that it can be done better, right? And I think that's the exciting part. I think most people don't know, and it's big part of this is education. And we as a collective group are educating both consumers, participants, the benefits of this. And look, we've seen high demand for mainstream adoption of RTP and other verticals as well. So I think we're going to do what we can from the Cross River side to continue to host webinars like this to educate folks, show the benefits of the technology. And I think a big part of kind of adoption is a lot of the legacy, whether it's banks, platforms, companies, they require modernization of systems and processes in order to facilitate it, right? I think I mentioned subledgering, right? There's probably not a lot of banks that can do that, not because they don't want to, but because they're on a very old legacy system and core that it's a behemoth of a project, right? And that's not the first thing that their local community needs or wants, and they're focused on other things. So I think for us, focusing on education, specific use cases that can help with faster payments, and real estate being a vertical that's probably top 5 for us, it's a big opportunity.
Yeah, I mean, Cheryl, you had shared that research article, that survey of Fortune 500 executives, and I guess one of the questions was, what's your plan for instant payments, real-time payments over the next 24 months? And I think the number was over 75% said they would like to get there for making payments, and over 90% had said they want to get there for receiving payments. So there's clearly a need and an interest in the real estate market. And Pavik, you mentioned that there's a lot of these organizations that bank with smaller community banks that it's just modernizing their payment rails, modernizing their online portals is just it's not a priority because that's not what's going to best serve their clients and their communities. But that's where we come in, right? That's the nice part, is that we're able to put our pieces together, have this organization stay at their regional bank, stay at their community bank, stay at their credit union, but utilize us and have us sit on top of their existing infrastructure, and gain access to these faster payment rails, gain access to the transparency that's needed when you're moving money within a real estate transaction. So we're able to offer that ease of use, that convenience, that transparency, the faster payment rails, all while they're still able to maintain their relationship with their bank that they currently love so much. So that's what's exciting, right? Is that we're able to use technology to allow people to kind of stay in their zones, right? Stay comfortable without disrupting their business, but giving them access to these tools at the same time.
And another thing that we haven't touched on, which in that survey, as you mentioned, Jason, is liquidity comes into play here. Mm-hmm. And when the rates were zero, no one cared. Now that some of the larger title companies and whatever are moving some major money, having an extra day, because it's really, everyone says faster payment. It's not a faster payment, it's a precision payment. You're making it exactly when you need to. You don't have to keep it in an account for a day before you can invest that money overnight at your bank. So liquidity is starting to come into discussion, even in the real estate markets, for another reason why they're adding, the companies, their accountants, their treasurers are adding real-time payments to their agenda for payments, because it's all about a payment strategy, right? As we started in the beginning, there's 5 different payment types in the U.S. If you start adding some of the other, like Venmo, PayPal's wallet, it just, we never retire one, we just add. I was talking to a treasurer one day, he's like, I got to manage 8 different ways for money to come into my company now. Do you know what the cost is to me between understanding the rules, regulations, the chargebacks? And, now I see real-time payments, and there's a great place for it, for my money management, for my ending day 2, many places. And that's what each real estate player, a part of the ecosystem, will look at and find where their benefits are. It's not just operational efficiencies. It could be liquidity. It could be just major customer experience, no day 2. So there's many places they should be looking at as their on their payment strategy, along with their technology strategy and their bank strategy.
Jason, you started off your partnership with Cross River in ACH. Why was that? Are you specifically opting in for same-day ACH over standard? And has that been easier for real estate customers to adopt to?
Mm-hmm. Yeah, so we initially launched our partnership with Cross River using standard ACH, quickly moved to same-day ACH. We really use the ACH rail as a gateway to get to RTP, and to establish the relationship with Cross River. ACH, it's a more mature product. It's from a technical perspective, it's a little bit easier to build into, partly because of the settlement time, right? Because it's not instant. When you build technology, you have time to kind of see it, see how the money's actually moving. With RTP, the fact that it's instant has technical challenges as well, and that's what we liked about Cross River, is that they have the technical capabilities of being able to transact not only with the new payment rail, but a really fast payment rail, because when that money's moved, it's moved, right? Like Cheryl explained, it's not a messaging system, it's not a memo that, oh hey, we'll pay you this tomorrow. You're not sending money on a promise. You're actually moving the funds. And that's the way RTP works. So we really wanted to just get establish a relationship, have a foundation, have our footing using standard ACH, same day ACH. We knew we needed to get to same day ACH very quickly because, again, we're involved in the real estate space, and the real estate transaction, like we've all talked about, is very time sensitive. So we quickly use same day ACH, which allows us to move funds within 24 hours. And now we have capabilities for RTP. But that was, yeah, that was always something from day one that we wanted to build with Cross River, and I'm glad we did it. It's a lot of time, a lot of money, a lot of effort. But you know, we feel like we chose a great partner. So happy to have Cross River to do this with together. And then just the challenges overall in the real estate market is, there's compliance and there's regulation, and RTP being a new payment rail is also a new type, right? It's a new brand. And a lot of the regulation today stipulates certain funds need to be moved via a check or wire. They're using the term wire in some of these regulations that were presented decades ago. But the RTP rail has the same characteristics of a wire. It's just not called wire. So there's things that we have to overcome as an organization, and talk to regulators and attorneys and legal. But it's nice to see that things are changing, things are moving in the right direction. A lot of it is having a relationship between the private sector and the public sector. Because now that, like we just talked about with the survey, now that the majority of organizations, 90+% want to start using RTP, there has to be some change and shift in the regulation as well.
Yeah, totally. Bobak, from your perspective, what trends are you seeing within the real estate space that would impact a partner's payment rail choice?
Sorry. I think we're continuing to see innovation in payment technologies that can really strengthen relationships with vendors, suppliers with on-time payments, which are very critical to many of these parties, right? Some of them are very small businesses. Delayed payments can cause delays of their normal business operations, right? But I think for some platforms, I think providing accessibility and being able to access real estate contracts and other documents in the same transaction flow with payment or payment request is really interesting. And for us, we want to provide a full stack solution that can cater to all these very specific things, where a company like Payments.io or other fintechs can really build upon the different layers that we can provide. And I think, look, faster payments is increasing efficiency, convenience. They can facilitate, to Cheryl's point, 365, 24/7. Look, I live in New York City. For every apartment, there's 7 people bidding on it. And if you don't, you have to usually provide a check, which often takes a long time. Most of us have multiple bank accounts, and to transfer money to your bank account that has the checking services is a pain in the butt, right? And so we're working with fintechs that are facilitating all these technologies to help just make a smoother experience for the consumer. And I think ultimately there's many factors to consider. I think with 2 instant payment rails in the US, RTP, FedNow, I think instant payments will be standard that people expect. And I think real estate will be one of those industries that will take advantage of that.
Well, we are close to time, so I'm going to do a bit of a lightning round to wrap us up. Cheryl, can you give us an overview of some of the new features coming to the RTP network? How will they help the ecosystem, and what can we expect in the next 6 to 12 months from the clearinghouse?
In the next 6 to 12 months, you're going to see more banks join. We add about 3 or 4 banks a month, and then you're going to see some being joined by FedNow. So you're going to see the regional reach, from national, and from your top 100 banks, you have many of them. But it's, as Jason said, it's the community and credit unions that are now leaping and connecting, and that reach is needed. So you're going to see that. Also mentioned documents. We have a program called Document Exchange that's able to, in the payment message, actually carry a reference number, and someone can get it presented at their bank, and they can select that number, and they're actually going to go to a PDF and see all those documents. That's going to be amazing for the real estate world. It's called Document Exchange. And then what we are rolling out right now, we've had it for a while, but it's reach again, and some of the large banks have just committed to providing the request for payment presentment to their customers. That's going to be big in real estate, so that a title company on close date, as I'm sitting at the table, can send me a request for that 400,000, and I can, as he's watching me, no fraud involved. I know he's sending it to me. I respond, and the money's immediately there. So the request for payment is just crawling right now, and its adoption, when it starts walking and when it starts running, the real estate agents. And I also see some real estate companies saying, I need real-time payment. I'm going to go find vendors and banks that have it if my current bank and vendor doesn't have it.
Well, that leads well into my question for Bhavik. Given your background, what advice do you have for players in the real estate space to feel more comfortable with and consider adding faster payments to their payment flows, or agitating their banks to add these capabilities?
Yeah, I mean, I think first and foremost, it's really about education, right? We have to educate the users of these technologies. In the commercial real estate space, it's widely known that there's complex and diverse transactions, multiple parties, extensive documents, but really bespoke financial arrangements, right? And I think the technologies that exist today need to be techified, fintechicized, come to the modern era, right? And I think companies like payments.io are really helping achieve that. But also one thing to note is that the real estate industry is like very heavily regulated, right? Which can make it difficult to implement, difficult to bring these new technologies on board. And I think often our clients feel traditional payment methods such as wires, checks can offer a certain level of traceability, accountability. It helps kind of check the mark for regulatory purposes. But the truth is, modern technologies also require the same regulatory standards as these old technologies, right? And I think we at Cross River are putting compliance first and foremost in our approach, and we're helping our partners feel comfortable with that regulatory lift. And I think to our clients' benefits, the standard we have for Cross River as a bank is the same standard we put on our clients. And so I think it's great for all the players involved.
I could vouch for that comment, Bhavik. The standard and compliance is certainly heavy, which is good.
Well, Jason, we'll close with you. What's next for Payment.io?
Yeah, we're very excited about our future. Today we are focused on the real estate space, and we positioned ourselves as we talked about earlier as a financial operating system that sits on top of our clients' existing infrastructure. Whether they're modern or legacy, we're bank agnostic, and we want to play a part in the financial inclusion that Bhavik talked about, giving all organizations of all sizes the access to transparency and faster payment rails. And it's something that the real estate industry really needs, given the fact that it is fragmented, it is disjointed. Having a treasury platform, a system, an operating system that sits on top of an organization and being able to connect all the different bank accounts, move all those different payments, I think is exciting for us, because that's what the real estate industry has really been asking for, and it's necessary to kind of move forward in the world we live in today. But the nice part is what we built is not specific today. We're focused on the real estate industry, but it's not specific. The problems we're solving are not specific to the real estate industry. The transportation industry, the healthcare industry, they face hospitality, right? They all face their unique challenges on how to accept funds, how to send funds, and the transparency needed to watch the movement of funds within their organization.
Well, we are at time, and I could have had, we could have gone on for a while. We were not able to get to all of the questions, so hopefully you have some inbound requests in your inbox at the conclusion of this webinar. Thank you, Jason, Bhavik, and Cheryl for joining me today. And thank you so much for Cross River for hosting us in this lively conversation.